everyone. This is Maheen, and welcome to the Canadian SME Small Business Podcast. Today, we're exploring fractional executive leadership, revenue diversification, and the operational strategies helping mid market businesses scale efficiently while improving profitability and execution. Joining us are two elite executive partners from BelMark Plus Inc., Cindy-Lynn Steele and Mark Johnson. Cindy-Lynn is a global brand strategist and Forbes Marketing and Innovation Award recipient with over 25 years of experience driving digital transformation for leading retailers. Mark brings over more than 35 years of operational leadership across software, SaaS, healthcare, and global distribution. Together, they help businesses build stronger systems, improve performance, and accelerate growth. Lots to dive into. So without a further ado, let's welcome our guests, Cindy-Lynn and Mark. Both of you, it's a pleasure. It's a privilege to have you on the show today. Welcome to the podcast. How are you?
Excellent. Thank you for having us. We're very happy to be here.
Yeah, it's a pleasure to be able to share this discussion with you.
Absolutely. Thank you so much again to the both of you for joining us. Now let's open our discussion because I did kind of, make some comments in my intro about what we will be covering. But let's open our discussion by understanding how do we expand, revenues without starving the core. Cindy-Lynn, a persistent point of failure across scaling small and mid-sized companies, it occurs when an owner attempts to chase, shiny new sales channels or geographic markets, accidentally drawing critical focus and capital away from the core business engine that funds the entire operation. Tell us, how can SMBs open new revenue segments without losing the focus on their core business?
It's a great question, and it's so important to really understand one of the biggest misconceptions, at least that I continue to encounter about growth, is that this misconception that you have to reinvent your business. In my experience, the most successful companies, they don't abandon what have made them successful, but they build from it. And so I think about growth in three stages. First, really maximize your value of your existing customers. And so when I speak, I'm probably going to speak mostly in terms from a retail CPG background. So if that's okay, I'll operationalize it that way. But so again, first, really maximizing the value of your existing customers. Second, I think about finding new customers for the products and services that you already do exceptionally well with. And then thirdly, only really look at the adjacent revenue opportunities that naturally extend your brand and your capabilities, right? So again, the biggest mistake I see businesses chasing shiny opportunities, I think you said the shiny objects word, before they've really fully leveraged their core strengths. And every new channel, product, or customer segment introduces complexity. So I have to ask my clients, does this align with your purpose? Number one, can we execute it well? And will it strengthen, not distract from your core business and your core direction that you fundamentally built your business from? I think, at BelMark Plus, we really help leadership teams evaluate growth opportunities across the entire business, not just from my background, primarily as a marketing and digital perspective, but growth decisions affect operations, supply chain, technology, finance, customer experience, and your own people. And so sustainable growth really only happens when those functions are aligned. And I've always believed that your core business funds your future. So protect it, strengthen it, and let it become the platform from which you expand. I think ultimately the way I would answer this is growth just shouldn't feel like you're becoming a different company. It should feel like you're becoming a better version of the one your customers already trust.
Right. That is a good starting point, and it tells us a lot in this space. And this particular perspective of yours, Cindy-Lynn, it kind of perfectly highlights the danger of unfocused diversification, which is protecting our foundation cash flow parameters while methodically, testing new retail spaces is how we scale safely, is what we understand. Now let's stay with your cross-functional strategy and look at turning digital customer data into real bottom line profitability. Tell us, how can leaders turn digital data and customer insights into scalable omni-channel growth?
Yeah, it's a great segue for sure. And thinking about customers again, customers, they don't experience your channels, they experience your brand, first and foremost and always. And so thinking along that line, technology's never really been more accessible, but technology itself doesn't create growth. And it's, strategy does, execution does, great culture does, having people at the ready does, and a willingness to fuel from the core is really what does that. So, I think today businesses have to access what's available to them, and they've got an incredible amount of customer data, more so than ever. Whether or not the information is completely true, you have to check all of your information now, of course, but the real advantage, it comes from connecting the dots and knowing how to connect the dots with all of that data that comes together. And the questions that I think leaders should be asking are, who are our best customers? And these are sort of in a logical order. And what problems are they trying to solve? How do they want to engage with us, and where? And what can we do to make every interaction certainly more relevant and more valuable for both parties? I think omnichannel, it's not simply about having a website, of course, anymore. Those are table stakes, along with social media or having a physical store. But it's about creating that one seamless customer experience across every single touch point. And customers, again, I just want to stress, they don't think in channels, they think in experiences, and your brand has to represent that experience. So, AI and digital technologies are making that certainly easier. And businesses can now find ways to predict demand more accurately, and personalize marketing more accurately, optimize pricing, for example, improve inventory decisions, and deliver more relevant customer experiences at scale. So, at BelMark Plus, we focus on helping clients connect data across the various business units, so across marketing, sales, operation, and finance, so that leaders aren't making decisions based solely or on isolated reports. They're making decisions based on a complete view of the customer and the business. So, that's when digital transformation becomes profitable growth. And I think, again, just to highlight, customers don't experience your channels, they experience your brand. And that's probably the best way I would set the stage.
Now that completely untangles the digital transformation equation for retail brands, really, that moving past vanity web traffic to capture unified consumer intent, it ensures that every tech investment drives measurable profitability. Now let's bring Mark into this conversation to really map out the strict operational systems that are required to deploy these strategies without breaking the enterprise. Mark, where do aggressive market expansions typically break down, and how do you keep teams aligned?
I'm going to answer this in sort of at a high level, just because the complexity is unique in many cases to each organization. But what I've learned over the years is that growth is rarely what breaks a company. It's poor preparation that breaks a company. So most leaders will think that expansion is a sales challenge. In reality, it's an execution challenge. So there's always going to be what I call a handoff between the win and the delivery, right? So the win is sales growth, entering a new market, but that delivery is that operating model. So when sales of that new market starts to outpace the existing operating model, you're starting to chase your growth first, and then you're stuck with, how do we retrofit our operating model? How do we retrofit our execution discipline after it's already broken? And things are falling through the cracks. Customers are disappointed. Partners are disappointed. So The execution discipline is really what needs to be in place right at the outset. So you've got to be able to anticipate it and you've got to be able to plan for it. So when you think about alignment, then I say alignment isn't going to be achieved through more meetings and dashboards and team building events. It really is achieved when everyone understands three basic things. So first and foremost, okay, what does success look like for our organization? Second, who owns what? Clarity in ownership, clarity in accountability. And third, which numbers matter? So obviously in an organization, it will be unique. So for some organizations, it's going to be cash flow, it's going to be inventory control, turns. In other organizations, it's going to be time to market, et cetera, right? So, but it has to be everyone understands the importance of what does it look like to be successful, who owns it, and let's focus heavily on what numbers matter the most. And I would also say that I would encourage to have fewer metrics, performance metrics, but make sure that those are metrics that everyone trusts and understands, and that they're reviewed more often, and that they're not necessarily adding more reporting. Because there's a lot of misalignment that happens when each department starts to run its own reports and look at the business in sort of its own unique way. When at the end of the day, every department coexists beside each other. So you need to make sure there's the harmonization between each department. And the one area that can destroy that is just data. If the data is not accurate, it's not consistent across each department, you're really going to start to get yourselves into misalignment. That's where silos begin. That's where people say, I'm doing my job, you're not doing yours, things of that nature. And I'll just say one other thing about growth, and that is, growth really is an opportunity it really highlights the strengths of an organization, but it can also magnify the weaknesses of an organization. So if your foundation isn't ready, so if you haven't put in that operating model, you haven't rejigged, revised, refined your execution discipline, excuse me, then you're really, the expansion is simply going to expose the cracks faster. And it's going to really take a hit in your customers' confidence and obviously your employees' confidence at the same time.
Right. And that provides an incredible masterclass in pure accountability management. And what we learned from this conversation and your insights, Mark, is that putting rigid operational guardrails around our scaling workflow, it prevents internal bottlenecks from turning into catastrophic capital leaks. Now let's explore or look closely at the corporate talent architecture and discuss how founders should evaluate their executive leadership requirements. Mark, tell us, how should a founder decide between a fractional executive and a full-time hire using operational matrix?
This is a really interesting question. It's one that's getting asked a lot in today's marketplace. Personally, I find that founders often are asking the wrong question. So the question shouldn't be, do I need a full-time executive? The question really should be is, what problem am I trying to solve? That is where you actually then can take an informed decision. So clearly some problems require permanent leadership, full-time leadership, but other problems will require experienced leadership right now. And this is where the concept of fractional or interim support should be considered, particularly when you're looking at sort of a defined objective, like an integration need, a stabilization need, a 90-day reset, or there's a crisis inside of the business. Someone's left, a critical employee has left, and there was no succession planning put in place. So using that fractional or interim option, you're getting immediate execution discipline, you're getting immediate experience with virtually no ramp up time, and certainly no risk of being pressured into a full-time hire. Because that's also one of the challenges a lot of organizations feel, is they feel the need to fill a position as quickly as possible, not necessarily taking the time to identify the right candidate, the right fit, both from an experience set, execution set, but also from a cultural fit. So very important that, it's easy to say, hey, if you're looking for filling a seat, a position that is going to have the organization is going to go own for years out, where continuity matters, where cultural fit matters. Absolutely, that's where you want to invest time in putting someone in place versus the speed and the of what a fractional or an interim model would do for you. But I think there's a lot of temptation, particularly in small and medium-sized businesses, where they feel vulnerable, and so they go right away to that sort of full-time position, and forgetting really that it can take months, maybe even up to a year, to onboard that individual successfully, when you actually need someone to fix a problem next week. And so it's a balancing act of saying, what do you need today? What do you need in the short, medium, long term? But don't limit yourself by thinking that you only need a full-time hire when there is a tremendous pool of experience out there that can come in and make a massive difference, have immediate impact on your organization. And that's exactly what BelMark is doing. And it's that cross-discipline that allows us to be able to interface in any organization, particularly in almost any environment. I'll add that there's some statistics that are pretty scary right now. So Heidrick and Struggles, one of the leading international search firms, they did a study last year, and they came up saying that 40% of senior executive hires fail within the first 18 months. That is a shocking number. I mean, the cost associated with that to any organization is astronomical. It's not just the recruiting costs, it's the impact on the existing leadership team, the impact on the balance of the employee base, and let's not forget the customer and partners base too. So it behooves organizations to really think it through, and that is one of the reasons why this vertical of fractional and interim executive support is growing so quickly. So you don't have the extended talent search, you don't have that ramp up time, and you certainly don't have the severance exposure if you make the wrong hire. So we all know the wrong hire is going to cost you a lot more than the right fractional executive.
But that completely clarifies the resource allocation strategy for mid-market firms, utilizing elite on-demand fractional partners. It lets an organization solve immediate execution problems without really locking in massive fixed salaries. How do BelMark's principles of fairness and integrity guide your embedded teams in fixing client operations? Then this question is open to both of you, so please let me know.
Cindy-Lynn, why don't you start, and I'll complement what you have to say.
Sounds good. Well, maybe first I'll start by saying one of the things I certainly appreciate most about BelMark Plus is that our values aren't something we created for a website or a client pitch. It is fundamentally a part of our history, our founders' history, that we cling on to and share. The name BelMark comes from BelMark Electric, which is founded by our founder, John. His father, Francis, he built that business based on fairness, integrity, hard work, and the belief that your reputation is earned through the quality of the work and the promises you keep. And so those principles certainly continue to shape how I work with every client today, how my team members of BelMark work with their clients, and also how we work together as a group. So, we don't arrive with preconceived answers or spend months producing reports that would sit on a shelf with a client. We really we strive to embed ourselves alongside leadership teams, and we aim to build trust quickly, thoughtfully. We understand how the business really operates based on our own experiences of being in those very same trenches, and we want to help execute meaningful change. I mean, we truly do. If we don't think we can add value, we are very transparent at the beginning and make that clear. And we don't say yes to everything. We take a long, hard look at how we can add value. And if it isn't the right fit, we're okay to walk away. And so, I think that's a big part of who we are just as people too, and that comes through in our work. Integrity means telling clients what they need to hear. It may not necessarily be what they want to hear. And sometimes the issue isn't marketing. Coming from my area of expertise, the thought of, just spend more in marketing, invest more in marketing, and they will come. Um, Sometimes it's inventory, sometimes it's operations, technology, or the amount of investment that an organization just spent in technology isn't working. So it may not necessarily just come from one area, and quite often it isn't. So because our executive partner group, we come from every major business discipline, we really fill the table. We're able to solve problems across the entire value chain, and always with the client's long-term success in mind. At the end of the day, our reputation is built exactly the same way John's dad, Francis, built his, by just doing what we say we'll do and delivering measurable results. So, trust isn't built by giving advice. It's built by delivering results. And I truly believe that all of us at BelMark follow that.
That is beautiful. And both of your insights, they beautifully match elite corporate strategy with deep human ethics. Bringing total transparency and such a hands-on work ethic onto a client's floor is how we understand, or how we know that people can quickly rebuild organizational trust. As we wrap up, what is the single best recommendation that you both have to maximize execution success for a business leader this year?
Mark, why don't you go first?
Okay, so well, we have a saying, advice is easy, execution is hard. And I think people really need to to reflect upon that and understand anyone can give you advice, but it all boils down to execution. But if I could leave business owners with one thought right now, I would say slow down long enough to create clarity inside of your organization and fix or strengthen your operating model before you add complexity, before you go and expand. Make sure you really understand how you're going to deliver the services or the products that to your target market, and be prepared. And I would say that no one owns. You got to make sure, again, it goes back to those principles. Who owns it? Agree on those numbers. Make sure you're reviewing your performance. And I think there's one other thing I would add too, is just this is a challenge for many founders, is that they feel that they have to be the smartest person in the room. They came up with the idea, they evangelized it, they got it going, got it up and running, but so that a lot of them feel that they have to have all the answers. And the reality is they can't. But the one thing that they should become as the leader inside of their organization is the person who creates the environment where the smartest thinking really emerges. So go with the best idea, not because it's your idea, but because it is the best direction forward. And I think that if many founders could just let go of some of that sort of pull to be everything to everyone, much more magic could happen inside of their existing teams. And that magic then gets translated, obviously, to happy customers and happy partners.
Cindy, do you want to add something to that?
Sure. I mean, I feel similarly along this path of creating clarity, and certainly around identifying priorities. It's too many organizations, they're trying to do 20 important things at once, and getting distracted with many shiny objects. And growth doesn't come from doing more. It comes from doing the right things, maybe few things, exceptionally well. And how you align your leadership team around 3 or 4 strategic priorities or pillars will allow you to build your house. Make sure everyone understands what that success looks like. Get one version of the truth, and identify who's accountable, and how that progress is going to be measured. And then make sure you check in and review those priorities consistently, and have the discipline to adjust when you need. So, I leave the audience, the leaders, with maybe this thought is, growth isn't something that happens to a business. It doesn't just happen. And it's something that leaders intentionally design, right? And then they relentlessly execute because they stay focused.
Mm-hmm. Those
Well
are
said.
spectacular final reminders. Did you want to add something to that, Mark?
No, I sort of said quietly, but well said.
Yes, it truly is. Both of you have very well said that true corporate resilience, it relies on matching customer data with strict operational discipline, driving new revenues without abandoning your core, and executing with absolute transparency. Thank you so much to the both of you for joining us to share your mastery today, and thank you for your time.
Thank
You're
you,
welcome. It was a pleasure, Maheen.
very
Take
much.
care.
And listeners, that were Cindy-Lynn and Mark from BelMark Plusing showing us how to collapse the pitfalls of unguided business expansion, leverage fractional executive partners to secure P&L control, and deploy structured omnichannel strategies to protect small business values in 2026. Thank you for tuning into the podcast. Please be sure to subscribe and visit CanadianSME.ca for more resources. And to learn more about how we're supporting the ecosystem, please visit smbfoundation.ca. A special shout out to UPS and ADP for their ongoing commitment to empowering small businesses across Canada. Join us next week as we explore our next critical topic. Until next time, keep innovating and keep growing.